All right, folks, Cecil Robles here with another daily trade. I want to talk to you again about the pound dollar today. We did some analysis on that last week, beginning of this week, and we were basically right in our assessment here. We had an upward movement. I said once price breaks above this high right here, then we're going to see some upward movement. That's exactly what we've had. And as you can see, we're sitting pretty close to right now about a 1.35 to 1 reward to risk ratio in this trade. Now, the reason why that happened, if you'll look back over here, we had support at this level. Price broke down through that level, popped back up, came back down, and then finally broke back through, and then now it tested it 1, 2, 3 times. That's a pretty significant sign that price is going to move up. We've had kind of an inverted head and shoulders type pattern right here. Here's the head, here's the two shoulder lines. The shoulders right here. And so essentially, what are we looking at now in the pound dollar? You should already be in a long trade if you followed the daily trade that I gave out a few days ago. What do we want to do now? Well, now what we want to do, if we're in a long trade, we want to jump down to the 4-hour chart. We want to manage our position a little bit better here in this particular trade. You can see the kind of pullback that we've had over the last day, yesterday, and then into today. We've had a little bit of a pullback, but now you can see it's really setting up here with these few candles in here to really start to potentially continue to move higher. So one of the things that we can do is we can move our stop loss up. This is where we essentially entered the trade at, right here where this red and the green diverge right there. You've got that line right there, that middle point. That's essentially where we entered the trade. And as you'll see, that's kind of at the bottom of our Ichimoku cloud. So what we can do is we can move our stop loss down to at least break even plus a few pips to make sure that we cover our spread in the event that price comes back and stops us out. The other thing that we can do is we can take an add-on position. Now, an add-on position, a lot of people like to scale out of their positions, but I actually like to scale into my positions. And in this particular case, this would be a good opportunity to scale into a position to add on to this particular trade. We have a little bit more conviction now that price is going to go in our favor and continue to move to the upside. So what we can do is we can actually increase our risk even more. If we took 1%, we could take a 2 or 3% trade on this next trade, on this next leg of the trade. If we took a 2% trade, we could take a 3 or 4% trade on this next leg of the trade. And that's going to exponentially allow us to grow our account and increase our results. If we took a 3% trade, if we're a very aggressive trader, we could take a 5 or a 6% risk on this next trade. Notice we're not taking a whole lot of trades here, so we can justify taking that kind of a risk on the trades that we do take. So what I would do is I would wait for this day to close out. There's probably not going to be a whole lot more action through the rest of the day. I'd wait for this day to close out, and then I'd be looking to buy into this particular market at the close of this day as price continues to move up higher. And I'd put my stop loss once again right down here where I'm going to move my break-even stop to. So essentially what's going to happen is now I'm going to move this stop all the way up to there, take the risk completely out of the trade now, and that's going to obviously give me a nice potential for profit continued going forward. I think this market can go higher. That's what we're looking at for the daily trade. So hope you enjoyed this. Hope you're making some money, and stay safe in the market.